Okay, let's talk Calgary housing. If you've been paying any attention at all, you know it's been a total roller coaster, right? Well, things are finally starting to shift, so we're going to cut right through all that noise and lay out a super clear game plan for you for 2026.
Really, the big story for 2026 is this move away from that crazy, frantic pace we all got used to. We're heading into a much more balanced, more resilient market. And you know what that means? It's a whole new cycle, new rules, and definitely some new opportunities.
So, this is the million-dollar question, isn't it? After that wild ride, what's next? What's going to happen with your home, your rent, or your investments? It doesn't matter if you're a homeowner, a renter, or an investor, the next few years are going to feel very different. And that's exactly what we're here to break down for you. All right, here's how we're going to tackle this. First, we'll look at the big picture, money and mortgages. Then, we'll dive into how the market's splitting into winners and losers. We'll give you some practical advice for your bottom line, touch on the political wildcard of rezoning, and then wrap it all up with your 2026 strategy. Let's get into it.
Okay, first things first, the big picture. You can't really get a handle on the housing market without understanding the cost of money. So let's look at how interest rates in the economy are basically setting the stage for everything that's about to happen in 2026.
So, a lot of what's happening in 2026 actually started back in 2025. You can see here, the Bank of Canada was busy. They started cutting their key interest rates step by step all year long as the economy started to cool down. And with every single one of those cuts, borrowing money got just a little bit easier. And that brings us to this number, 2.25%. By the end of October 2025, that's where we landed. Now, this isn't just some random number. It's a huge deal. It signals a major shift away from all that volatility we've been dealing with. We're talking about a much more stable, much more predictable environment for borrowing money.
And hey, just so we're all on the same page here, this policy rate is basically the foundation for everything. When the Bank of Canada lowers it, the big banks lower their prime rates too, and that directly affects what you pay on things like variable rate mortgages or a line of credit. It's all connected.
So what's the takeaway here? Well, it's like we're entering a kind of Goldilocks zone for interest rates. They're not crazy low like they were during the pandemic, but they are way down from those painful peaks we saw recently. And that predictability, that's a massive advantage if you're planning any kind of big financial move.
Okay, so a stable interest rate across the country is great news. But what does that actually mean for your wallet right here in Calgary? How does it affect the day-to-day cost of living? Let's zoom in on that. You see, your mortgage is just one piece of the puzzle, right? These numbers here, they tell the rest of the story for your monthly budget. When you look at what you're paying for rent, for a transit pass, even just a meal out, you can start to see why Calgary is still a really attractive place for a lot of people, especially when you stack it up against other big Canadian cities.
Okay, this next part is super important. I'd say it's maybe the most important thing to get your head around for 2026. And it's this. Calgary doesn't just have one housing market right now. It has several. And they are all acting in completely different ways.
I mean, just look at this chart. It really tells the whole story in 2 bars. You've got detached homes, prices are holding incredibly steady, they barely moved. And then you have apartment condos, where prices have dropped quite a bit. It is literally a tale of 2 markets.
And if we drill down a little deeper, that split becomes even clearer. Detached homes? That's a stable, tight market. But once you start looking at row homes, and especially apartment condos, whoa. There's a lot more supply out there. It is completely flipped to a buyer's market. And all that means is that there are more places for sale than there are people ready to buy. So if you're a buyer, you've got more options and way more power to negotiate.
Now, this whole split market thing isn't just happening for people buying homes. There's another really dramatic story playing out on the rental side of things. And it's all being driven by a massive increase in the number of places available to rent. 4.8%. That is the city's current rental vacancy rate. And to give you some perspective on that, just a couple years back, it was down at a painful 1.4%. So this jump, it completely flips the script. It changes the whole power dynamic between landlords and renters.
Okay, so let's recap. We have a split market for buyers and sellers and a totally different world for renters. So the big question is, what do you actually do with all this information? Let's get right into some practical, no-nonsense advice. If you're a homeowner right now, this is a number you need to pay attention to, 6%. Even with those lower interest rates we talked about, a lot of folks renewing their mortgage in 2026 could still see their payments jump by about 6%. That's what we call payment shock. Think about it. If your mortgage is $2,500 a month, that's an extra $150 you have to find every single month. That's a real hit to the budget.
This is why your renewal strategy is so critical. It's not just about hunting down the lowest possible rate anymore. In a more stable market like this, it's the other stuff. The flexible terms, like being able to take your mortgage with you if you move, or making extra payments without penalties, that's the stuff that can save you a ton more money in the long run. Okay, but what if you're a first-time buyer? Well, listen up, because this balanced market is your best friend. Those crazy bidding wars? Gone. You actually have time to look around, you have choices, you can do your homework, and there's just less competition. The absolute key here is to focus on what you can actually afford for the long haul. Forget about trying to perfectly time the bottom of the market. That's a fool's game.
And this brings us to the two sides of the rental coin. If you're a renter, that high vacancy rate means you are in the driver's seat. You have leverage. It's simple supply and demand, right? Landlords are competing for good tenants, and that's why you're seeing incentives like a month of free rent or utilities included. But if you're an investor, the game has completely changed. That high vacancy is a huge risk. You can't just buy something and hope it goes up in value. The focus has to be on solid, reliable cash flow. That means the rent you're collecting has to cover all your costs with a little profit left over month after month, ideally in a really great location.
All right, before we pull this all together, there's one last piece of the puzzle we need to talk about. It's kind of a political wild card, but it could seriously change the future of Calgary's housing supply. And that's the big debate over citywide rezoning.
So you've got two camps here. On one side, people are saying this is absolutely essential to create more housing, especially things like row homes and townhouses, that so-called missing middle. The idea is that more supply could help with affordability. But on the other side, you've got people worried about losing neighborhood character and putting too much pressure on infrastructure like schools and roads. What happens here is a really big deal. If it passes, we could see more supply down the road. If it fails, well, Calgary could lose out on over $250 million in federal funding. And those supply problems we talked about, they'll probably stick around.
Okay, we have covered a lot of ground. The economy, the split market, what you should actually do about it, and even the political side of things. So let's boil this all down to the final takeaway.
Here it is, your 2026 game plan, simplified. If you're a buyer, you move when the numbers make sense for you, not because of some headline. If you're a homeowner, you use that mortgage renewal to build in more flexibility and make your finances stronger. And if you're an investor, it's all about the fundamentals. Forget speculation, it's back to basics.
At the end of the day, this new, balanced market is all about rewarding people who have a plan. The days of easy, speculative wins are over. We're now in an era of smart, strategic decisions. So the only question left is, what's your move going to be?